A new report out today suggests up to 5 of the nation's remaining 16 coal power plants could be unviable financially by 2025 due to a flood of cheap solar and wind entering the grid. The report is by two groups, Consultants Green Energy Markets and the Institute for Energy Economics and Financial Analysis, whose lead analyst is Johanna Bowyer. She joins me now. Johanna, thanks so much for your time. Explain to us basically the key findings in the report and why you say some will be unviable and at least one will shut sooner than expected.
Sure. So what we see is there's a huge amount of new renewable energy being installed. So from 2018 to 2025, new wind and solar installations in the national electricity market is the same size as the whole of New South Wales electricity demand. So it's a very large amount of new renewables. And wind and solar have a much lower operational cost than coal and gas. So what the increasing amounts of renewables is going to do is it will do two things. One, it reduces prices overall in the national electricity market. And two, it would result in a reduction in the output of coal and gas plants because renewables can bid into the market at a lower price than the coal and gas plants who need to bid in at a higher price to recover their operational costs. So then what we did was we looked at what does this mean for 2025, and we found that if we forecast this out to 2025, 3 to 5 coal plants would be unprofitable, so they'd have negative earnings in the wholesale spot market. And with this kind of financial situation, we anticipate that at least one coal plant will close before 2025. Liddell is already slated to close. That's been previously planned, but it is likely that another coal plant will close in addition to Liddell. And once one coal plant closes, then the financials of the other plants would close.
Which plants
the ones
are
at risk then? So if electricity prices remain the same as they are now, then Eraring and Bales Point B in Lake Macquarie and Mount Piper near Lithgow are most at risk. But if the prices continue to drop, then it would be the previous plants plus Gladstone in Queensland and Yallourn. And that is based off which plants have the highest operational cost.
And what happens if they leave early? Is there a risk in terms of stability in the grid?
So we found that with the Liddell gap, that can be filled by renewables 98%, and the other 2% can be filled by gas or coal. But if another plant does leave, then there'll need to be replacement capacity, and there'll need to be studies to make sure that there's enough replacement capacity. The huge amounts of new renewables will have us covered, particularly during the day when there's a lot of solar energy. But in the evening times, there might be a need to have additional dispatchable capacity like batteries or hydro or other kinds of technologies that can quickly turn on and off to fill in those gaps when we don't have renewable energy generation.
Johanna Bowyer from the Institute for Energy Economics and Financial Analysis, thanks so much. Appreciate it.